What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 24th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and as you can probably tell, I'm back home on the East Coast in the US after over a month's worth of travel. I can say, as much as it was fun, it is good to be back home. And today we've got a really relevant topic that I think a lot of you will enjoy. We're just going to be taking a look over the broad sense of markets that we watch on the channel, not only in cryptocurrencies, but also in equities and commodities, and really talk about what we're going to be watching over these next few weeks towards the close of April and the early portion of May. So let's go ahead and dive right into it, guys. We're going to be talking about not only some big moves that are already being set in crypto markets, but also some things as well that we're going to be talking about looking forward to over the next few weeks. And again, kind of setting the tone for things. Crypto is really at an interesting position right now. And as we've been talking about Bitcoin slowly but steadily setting up to continue climbing to 6,000, we actually just set a higher level here, actually breaking past the previous close here that we had over here on the 10th of April. So I was actually at the airport when this was happening at the time, and a lot of people are interested in the fact that we're not only seeing continued climb in price action, but we're actually starting to get back to those levels of volume where it's quite interesting. Again, setting higher levels of price, higher levels of volume, bringing confidence into this market. Now, this is a good sign to see, and again, as I've talked about it probably once or twice, a lot of people have asked me for the reasoning for this. I think a lot of people look for headlines to always correlate it. You guys know here on the channel, we usually believe that there's something kind of behind the scenes that's usually leading to what we're seeing. The biggest reason I think for this is that you're not only getting a little bit of FOMO and a little bit of trading after what was such an amazing leap of volume and price action, but ever since we really had this buy candle come in and the price action actually hold at these levels, I think it proves substantially that we're actually starting to get some people buying around this range who are much larger scale investors, predominantly those who would be buying OTC, right? The reason you have these people coming in at these levels, buying up huge amounts on spot market rather than OTC, is that there's just too much buy demand for what's being offered on the sell side. And the way that plays a role in regards to price is, look, like, you know, if I can't get my 50,000 Bitcoin buy order, I wish I had that much money. I would be buying the dip. If you can't get your 50,000 Bitcoin buy order because there's just not enough whales on the sell side, you get to a point where you almost feel this kind of sense of FOMO where it's like, it might as well just be good if I just go ahead and buy this on exchange and start buying up Bitcoin on spot where I know there's liquidity that I can buy. Sure, I'm going to pay a little bit of a premium on some of it, but I might as well get in first before someone else does. And before I have to wait until, you know, an OTC order is going to be, for example, if I can actually buy 50,000 Bitcoin on spot market, and I think that I'm going to be able to get that, right now instead of actually having to wait a few other hours before someone else gets their buy order. And let's say price comes up to this range, and I now have to buy spot market at 5,000. That's not good, right? So sometimes there actually is an incentive to just get on the spot market if you can't get your order filled in OTC. I know I just rambled on about that, but that's very important into understanding why this buy pressure is continuing with little to no news in the crypto space. Now, I know some people as well have been talking about NVT, and I'm going to incentivize people again to think in this perspective, right? I don't want to tell you guys what to think overall, but here's my major point here. NVT can actually go up a little bit higher than where we are right now. And in fact, as we can see, NVT can hold in the overbought range for some time. A lot of people, I think it's around 140 points or 145 points when NVT is overbought. But my kind of belief in this is that I wait until really we get into a range of the top 2 to 3 days in NVT. I wait until we get towards around the 160 point range. Excuse me, not 160, 180, 185 in this case. I'm going to be waiting again until we get towards an upper range here. So we can see the peak here was around 177. Peak over here as well for NVT during the peak of the bull run was 183. And again, I'm waiting for somewhere around that range, getting close to around 180. So I'm not, fighting in this case. And the reason why I say that is because as you're getting a rise in price, and as we've been continuing to climb here ever since April 1st, NVT itself has actually not changed that much, right? We've gone up a few points here, 3 points. And the reason for that is because as we've had an increase in price, we've been having huge OTC deals going on right now. There's been huge trades going on the actual ledger of Bitcoin, so you're getting more transaction volume, which levels out NVT, right? You're having productive value being exchanged as the prices continue to go up. So it wouldn't be too hard, as we've seen Bitcoin already climb up a few hundred extra bucks from that level and NVT remain quite flat, to see Bitcoin go up to 6,000, right? And that's our general short-term target range. Now, as we've talked about, I think that 6K is going to serve as pretty sharp rejection. And what it's inevitably going to lead to, in my opinion, I don't know if this will be the uptrend that carries here. It might take a little bit longer to get to 6,000. Either way, what happens is when we hit 6,000, I think we're going to come back down and make support on previous resistance here at 4,200. And I think this is really going to be your last opportunity to find Bitcoin at lows. In fact, it might even line up as well. I mean, you can adjust the trend line. People will have it drawn differently. Basically, I think it's going to come down towards where we set a third linear low with these two previous ones that we saw in the open market. And that could be sometime this summer, sometime in the early fall. Again, it really varies. Again, I don't think you're always going to get it perfect in this case, but somewhere around this range here during the summer is when we're setting the final low. And that's why we did that video talking a while back about where I believed the bull run would really start in this case. Where are we going to find that final low before we really start to take off? All right, so that's my general case on Bitcoin, guys. Again, a lot of people trying to short this market, guys. After setting in these kind of lows, guys, the 80% retracement, it's not that good to bet against the market. When we get to 6K, yeah, in the short term, we're going to feel quite confident that we're going lower, but we've still got a few $100s to go, in my opinion, in that case. So would love to know what you guys think down in the comments down below, whether you agree or disagree. But if you guys make a comment on it, explain why. Talk about the TA and indicators that you're watching. Talk about the fundamentals that you're watching at the moment. I'd love to hear down below, guys, and get a discussion going. Now, the one thing we have to talk about that we've briefly mentioned in about 1 or 2 daily updates is the upcoming Fed announcement. So the NASDAQ just closed, actually yesterday, if I'm correct on this, it actually closed to new highs, if I'm right on that. So, well, actually, I apologize. I think, sorry, we did break to new highs. We didn't close to new highs in the NASDAQ, but we did break to new highs. So the high here was at 8131, and then over here, sorry, we're still off a little bit there. Okay, so the NASDAQ is pretty much sitting at its previous highs here back here in August in 2018. I don't know why. For some reason, I looked at this earlier. I thought the level was higher. Maybe I'm missing something. But the NASDAQ basically is at its all-time highs. And because of that, we have a very interesting event coming up that we need to keep in mind here. Equities have had a major rally. I mean, not just in U.S. markets as we're taking a look at here, but we've seen the Shanghai Composite have a 30% rally. I think it's like 25 to 30% rally for this year. And we know the factors that have played into this, guys. We know that there was the rebalancing on the balance sheet, the rebalancing on fixed income markets, and you basically pension funds in this case, where people were moving money out of fixed income markets, putting into U.S. equities, basically claiming they were buying the dip for everyday retail investors. And then along with that as well, you also had the largest injection of credit from China. I think it was around $400 plus billion of credit injection in a matter of a month or two. In China. Actually, no, sorry, that was actually only in January, but we've had a continuation of that, obviously, as it happens every single month, of new capital coming into China. But the largest single month credit creation in China, crazy stuff. So you have all these macro factors coming into play, and the stock buybacks and things of the sort that have always played a role in peak market cycles, all coming up here towards the Fed decision period. That's going to be towards the end of this month, where the Fed is going to sit down and determine whether or not it wants to, continue raising rates, cut back rates, keep rates where they are, and then also discuss where they're going to be taking the balance sheet. Are they going to continue the tapering of the balance sheet, reducing their ownership of financial assets, or are they going to increase it? Well, I'm going to go on a limb here, guys, and talk about what I think the Fed is going to do. Right? We have obviously seen, the Fed has seen the positivity that's come from its monetary policy. And I think it understands that if it actually starts to do what it was continuing to do, which is increasing rates and cutting back on the balance sheet, you are going to see absolute panic in markets, and we're going to see the exact same repetitive sell-off, right? Markets are very, bipolar in that sense. Well, I hate to use that, but that's a decent analogy. It's just very off and on in this case. And the Fed really is that indicator that's going to determine where the market goes. We saw that all the way through the fall of last year and into the winter. But My analysis, from what I can guesstimate, again, I will never know exactly what Powell does, is that he's not going to raise rates. And in fact, they're going to freeze the balance sheet. And I think this is a very neutral point of view in what the Fed's going to do. I don't think we're exactly right at the point of my ultimate fear, which is that when we start to correct like this again in equities, the Fed is going to take upon its last weapon that we haven't seen, and it has to do with QE and the balance sheet, and that is buying up financial equities. Okay? Now, what do I mean by this? This means that the Fed wouldn't just be buying U.S. Treasuries. It wouldn't just be buying toxic assets like mortgage-backed securities as it did back during 2008 and 2009 and 2010, all the periods of QE. What this would mean is that it's going to be following the footsteps of Japan by buying U.S. companies, U.S. stocks. That is something we have not seen the Fed do, but we've seen the Bank of Japan do it. And in fact, the Bank of Japan has become one of the largest net asset owners of Japanese stocks. They own 80% of the ETFs in Japan. They own, I think they're a top 10 shareholder, and I think the vast majority of stocks in Japan. So what happens when a central bank starts to step in and say, hey, look, we're going to basically be buying equities? Well, markets keep going up because it's a guaranteed buyer. And you'd be silly to try and go against that system, to short that system. So when we've talked about, 2018 and 2019 being the first year, the first 2 years really, where we're starting to worry about recessions and economies, again, we can see that central banks and different players at the top can find ways to play the system to prolong the cycle. That's the key thing to take away from this, guys. Throughout all my rambling, you guys know, we have to be open-minded to this, right? We have to take in that there's a lot of different factors that play into markets, predominantly central bank policy and the variations in between central bank policy, but also and all the interesting tools and mechanisms they can use to prop up markets. So we're going to be watching for that decision. If the Fed ends up even raising rates or continuing its correction of the balance sheet, I think you're getting a break through this. If you don't hold that neutral point of view or do what would be more positive for equities in the short term, which again I don't believe is the right thing to do, which is basically starting to buy U.S. equities. If the Fed even mentions they're considering that, even if they don't, they're just considering it, you will have all new highs in equities, and we're going to be going on a monster rally if they even talk about considering that, because it's just more guaranteed that the upside is there's more upside to come. All right, so one thing that we haven't talked a lot about, guys, is commodities, and I want to spend some time to discuss it because I think it's a topic that interests a lot of people, because many people have been curious as to whether or not we're going to be going through, an uptrend in gold and silver, right? Has it been finally enough time in a bear market for us to do that? Well, you're going to get lots of variations of opinion, guys, on how to draw trend lines and how to analyze things in the long term, but I'm going to go ahead and take gold to the weekly here in the longer term, right? I'm at a period where I'm still optimistic on commodities, but I haven't pulled the trigger yet. I haven't made the trade. All right, this is the long-term chart here, back for a few decades here for gold. And we can see that we have broken out of the wedge. In my opinion, from my analysis, as we can see, we had higher lows here and lowering highs. And it looks like we're still holding relatively above this level, right? We're above, some of the major moving averages, the 50-week, the 200-week, tailoring around the 100-week here, and really holding on the outside of what was previous resistance. So you have variations in the trend line. Some say that we've broken through. Some say that we're still holding very well. In fact, we've got some room to really breathe here before we really start to talk about breaking that previous line of resistance and no longer making it support. But right now, it looks to be holding quite nicely. Again, at this level where we had resistance, we've held support here 2 times. So it's good to see. And what I think you're inevitably going to get, guys, is the interpretation that we're still holding this. And as the 200-day creeps up here, right, so it's moving up at this nice steady pace to sometime in late May, early June, gold's going to hold on to there and ride off of it. That would be the optimistic case. Now, if we end up breaking through here on this line here that's previous resistance now turns support, and we break through the 200-day, you're going to be coming down to the lower range here on the support line. We're going to have to test that again and then wait towards seeing if we have a breakout to the upside or break downward below that line, right? So the contagion point here, if you really want to expand the trend line, we're going to be getting some kind of giving in price here in the early summer, right? We have to, at least. That's the bare minimum. So I think more likely, though, we're setting up to start seeing some more upside in commodities going into the fall of this year, right? We're going to come down, hold on the 200-day, and ride off of it. Not overcomplicating it, just keeping it very simple, right? And again, you've got the 50-month coming in for potential support. A matter of the real rally coming up, I think, is when you break past some of the major monthly moving averages like the 100-month, right? If we can get above there, that's where previous resistance is multiple times. You can see around this price range, around the 1350, 1370 range. Previous high here, previous high over resistance, and over here as well. So I'd like to see that going on for golds. Now, if we take a look at silver here, and we go down here to the daily, we can see that the daily we've actually broken through the 200-day. I think it's very likely actually that silver comes back down here to the low $14 range per ounce. And at that range, I'm considering actually picking some up, not only for short-term trading, right, between the $15 to $16 range, but I think that this is going to be the lowest level you'll probably see for silver. And I'll show you why. If we take a look at the monthly, this is what I'm generally assessing. I'll even turn off the moving averages here because I don't really think it holds much relevancy. What really holds relevancy here is what was previous resistance for so many occurrences and has turned as clear support here for silver multiple times. And what I think you're going to get is that silver is going to continue to tighten here. Again, we can kind of drag the lines here and basically adjust it here to where we can see that price is tightening here, right? We're having lower highs, right? And we're holding a continuous level of support. This will eventually lead to a break up or break down, right? This is going to lead to a very severe move. I can tell you all, at the peak of a market cycle where commodities are extremely cheap, comparative to, especially precious metal commodities, are extremely cheap comparative to equities at this point. And equities are extremely overextended. And we're starting to see a risk on to risk off narrative over the broader term of the macro perspective in markets. I think you're setting up for an opportunity here for silver to easily in 2020, 2021, with how fast this thing can move, as we've seen previously, if fear starts to set in sometime, more likely in late 2020, 2021, where we could revisit these levels up here for silver. I mean, with the amount of inflation we've had, in the economy, with the amount of stimulus we've used, things of that sort, and the overextension of capital and equity markets that needs to move outward, with the size of the silver market, it would not be that shocking to see that, right? But it's not going to happen overnight, and I'm not FOMOing into it at the moment. I'm waiting for a break on this line. That's going to be my catalyst for silver, or for gold to get back up above its previous highs that we've seen here in 2019 and 2018, right? So again, summarizing it, guys, I'm waiting for a break on that line there for silver. For gold, again, I want to see this get above this range where we've seen resistance at around 1350. And from there, I'm going to actually be probably more exposed to commodities outside of crypto, not doing too much equity trading. So those are the major things, guys. I'll throw in a little bonus round here just to make those people happy who are big on the ETF. URA, what's happening with URA? Nothing much. There really hasn't been any move after we've broken out of the wedge. And it's a little bit upsetting to say, but at least it hasn't gone anywhere in the red, right? Whereas crypto markets have been, I guess in the broader sense, ever since we talked about URA, have been still a little bit lower than where we were back here during the summer when we started to talk about URA, its potential breakout. And the other thing is for uranium markets in general, the thing I'd tell you guys to watch is not URA. I'd recommend you watch uranium spot price. So we're actually going to take a look at one of the best ways you can actually kind of get a reading on that on TradingView is through the uranium futures that are traded. And we didn't get past $30. This was a big thing we talked about in our newsletter until we had a close above 30 on spot price. And in fact, I would have liked to see a significant break above 30, which we haven't gotten. In fact, we got a rejection. Because of that, I'm not making any trade on URA, guys. And I told you guys, as I've said previously, I'll let you all know when I make those trades, when I pull the trigger. But right now, we're back down to 25, right? This is not what we want to see in this case. We probably need to see more cuts, and we also probably need to see more reactors turn back online. And luckily, that trend is setting into place, as we talked on the Uranium Fever video, but it's going to be a while before we really get there. Alrighty, So that's it for the video today, guys. Wanted to keep it relatively simple and, talk about the broader sense of things. I know you guys sometimes want me to talk about things outside of crypto. I'm not giving up on traditional markets. I'm watching the whole picture. As you all know, I'm a macro trader. But until the next video, guys, thank you all so much for watching. I'd love to know in the comments down below what you think about all this. Feel free to share your opinion down below. But until then, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.